Serene Education with the 4 majors notes update for the 2nd of July 2013. Hi guys, hope you had a fantastic weekend. Cracking on today, 4 majors using FX8's ultimate template. And first off, we're going to look at the euro against US dollar. So, what's been happening? Let's see what happened yesterday on the market. A lot of indecision here near term, as price has come unstuck here just around the monthly Fib retracement in the shape of the 38.2 here on my blue. Blue line constitutes my monthly time frame. So I've drawn a fib from my highest point to my lowest point, or lowest point to my highest point on my monthly to give me this blue line. The red line over here is my weekly 38.2 fib, and these smaller ones over here are the dailies. So you can see what I've done is I've taken the daily high, which is the current high that we saw in January of this year, to the current low that we saw in March of this year, and what I'm left with is these dashed yellow lines. So as it stands at the moment now, I want to see where price is trading in conjunction to all this. You can see price is testing this major support and resistance level here at 13,300, which constitutes a very long-term support and resistance level. This goes back to 2010. Ideally, we like to see price, if it's negative, to remain below this area, the 38.2 here. If it trades above it, then there's more likely for potential upside to remain. Here you can see a lot of hesitation as price is trying to move below this area, as a 23.6 on our daily has been the one that's actually inhibiting price from falling any lower. Doing so, price has obviously pulled back, and yesterday's candle seeing the euro rally against US dollar and now trading above 38.2. So intraday, what we're seeing now is we're seeing price consolidating. Quite clearly, you can see price is moving in a consolidative range. However, this remains below the institution on our 4-hour time frame. Still making lower swings, swing low, swing low, swing low. The current attempt right now is trading at the previous swing low, or high swing to the downside, and it's still being stopped by the institution moving average. You can quite clearly see the institution here, this green line above price as we speak. So ideally, if this is to remain positive, as you can quite clearly see, there seems to be a lot more positiveness on the chart. But our most important indicator, the R squared, telling us the sentiment is genuine, is red, literally across the chart. So even though we have a lot of buying sentiment here, the R squared is not complementing that sentiment on that buying. So it's more consolidative, and you can see quite clearly price has been consolidating. So I haven't been trading the euro against US dollar because she's been trading into this major monthly Fib retracement here at 38.2 at 1301 or 1300, if you want to call it that. Primarily because price has been consolidating now. It tends to consolidate, tends to be undecided as it heads into a major support and resistance level, like our monthly here, for example. So ideally, we want two things to happen. If this price has been falling quite aggressively recently, we are trading in and around the 38.2 mark. Ideally, if this is to continue to be negative, we want to see a bearish engulfing counter close lower, get below this consolidative range, guys. Get into cleaner air, and if I bring my box into the picture, there we go. Get below all of this not news, but this consolidated range out. Get below 1296 in particular. We could see cleaner air to the downside, a lot more manageable. At the moment now, it's trading in a consolidated range, very, very noisy. Ideally, getting above this consolidated range on the upside here, above the weekly 38.2, would allow me to trade cleaner air to those current highs that we've just come from. So very, very important. I'd rather not trade the speculation over here intraday, but wait for a confirmed break either side of this to get a clearer picture of trade analysis or trade sentiment, and it fits my passive way of trading and trading 4 hours in particular. So I'm going to wait. I've already put my alerts on either side of this of price as we speak, and I'm waiting for a confirmed break on either side of this. We must remember this Friday coming up is non-farm payroll. It's the first Friday of a new month of July. So non-farm payroll is expected. Would the non-farm payroll figures go as to helping price? Potentially. So there again, do I mind giving away a full week so I can get a true buying signal, upside or downside? Don't mind at all. Because when it does come, I'll be able to get a clear indication where price is wanting to go, and therefore trade with confidence that there's going to be less speculation and more directive sentiment in the direction of the overall trend. So boxed and tagged for euro against US dollar this morning. US dollar, sterling against US dollar. Here again, looking at this particular pair, you can quite clearly see that my I have a confluence of all my fib ratios here. You can quickly see monthly, my weekly, and my daily fib, all very much in play right now. And the reason why this 15,300 over here is a major support and resistance level that goes back a number of years for sterling. So as long as price trades below this, then we're looking at further negativity daily to the current low that we saw here in 14,800. But you'll notice that the last attempt with a break lower failed to see price really rally to those downsides and ended up finding a near-term support in and around this area here at the 15,168 mark. And we had these bullish engulfing candles, and we saw price moving back up to the upside. So as long as it maintains below the monthly and the weekly, look to see if price can actually break below the 23.6 intraday here to see that sentiment move lower. You can see the long-term sentiment is very much negative, but intraday we're seeing a bit of buying sentiment. A lot of indecision candles on our daily, and we don't trade indecision, we like to trade a decisive candle. So we're looking for a bearish engulfing candle. If this sentiment we've seen recently where sterling has dropped quite significantly is genuine negativity, then we want to see a continuation in the direction of the breakout. We are trading below the monthly, we are trading below the weekly fib. You can see there's a lot of consolidation here where all these fib consolidate with each other, and you can see price has been quite hesitant in this area. So ideally we like to get below all of this to trade into cleaner air. Okay, there's a lot more cleaner air below price as you speak. So get below that. Bearish engulfing in the direction of the long-term trend would indicate we should be looking downside towards this first target over here at 15,0168, which is, if we look at the 23.6 and we get a bit closer below that, we're looking at 169 odd pips to that level. From this level over here down to our long-term support and resistance level, which is the 14,500 mark that we saw 2010 consolidation, is another 177 pips. So there's more than enough target to the downside, but we need to see a confirmed break lower. Will non-farm payroll do that for this to price? There's the opportunity for that. We have a lot of news coming out. We also have the interest rates announcements for sterling on Thursday. There's a lot of news coming out Thursday and Friday, guys. So we could expect price to move on that news or on those news announcements when they come. So hesitation at the moment now, but it's clearly trading below the monthly, below the weekly. So the overall sentiment is one of negativity because it's trading below those levels. So we should be looking for negativity intraday. Intraday, we are seeing the 23.6, which is our daily fib retracement, hindering price from falling any lower. The longer she spends time going below, along this line, ultimately she's going to reattempt the current fib highs. Okay, but you can see a lot of indecision counters out. You can see the overall trend is one of negativity. Swing low, swing low, swing low on a 4 hour. We are going to see something happening in and around this area here. Wait patiently for the 4 hour candle to close up or down. You can see there's a lot more resistance above price than there is support below price. So break of the support in the direction of the long-term trend would give us a nice profit target, two profit targets to the downside towards that major long-term fib retracement support and resistance here in the shape of the 61.8. So be patient, wait for something to occur. We get a bullish engulfing candle up into the 23.6 on our monthly. We would then have to reassess the charts. We would have to see price getting back up above 23.6. It's no good trading into it because this is a major monthly fib retracement. It's got to be on the upside. If you get to the top, then you've got this major institution over here to deal with. There's a lot of there's far more resistance above price than there is support below. And if because price is falling, look for the break to the downside. Okay, US dollar Swiss franc. Let's have a look at this particular pair. Prices have been falling recently after Fed announced tapering on the QE3 plan and moving swiftly between our monthly fib retracement here at the 23.6 to our weekly fib retracement in the shape of the 23.6, as well as our daily fib. You can see there's a consolidation between the two over here. Since a breakout, not really moving any lower. On the breakout, we saw price actually hesitating at the underside of this weekly fib retracement here in the shape of the red, which happens to be a prior consolidated range. We saw a lot of indecisive candles, so we're looking for a decisive bearish engulfing candle at the underside. However, we saw a total different change on the US dollar against Swiss franc. We saw price rallying back into the major resistance level here, taking a break, and then breaking through that into this consolidative range. You can see a very tight range here. Price trading with all the moving averages and very hard, a very strong resistance level here, or consolidation range as a standard. So you can see where price is trading now. We see a nice bounce. So from the highs we saw here just recently in May to the current low on our daily here in June. You can see prices bounced above the 23.6, the 38, and now testing the 50. And you can see as we head into the 50, you can see now on our daily a lot of indecision candles, spinning top, potentially a spinning top or even a shooting star. And you can see the actual range last night on the Asian session, one of consideration yet again. The longer she finds resistance here, guys, the more likely price is going to revert to the downside, which would mean that we should be looking for opportunities from the 50% fib intraday to our 38.2 fib intraday. And where price is trading right now to our 38 is a good 48 pips and change to that level. So if we move to our 4-hour time frame intraday, you could see that consolidative range, guys. The institution moving average on our 4-hour is impeding price from moving higher. What we have seen on the 4-hour is swing highs, telling us that we should be looking for upside, and we've seen that quite comfortably swing high, swing high, swing high, swing high. But as she's headed into the institution moving average, into the fib retracement on our daily, quite clearly we are seeing a lot of resistance above price in the shape of the institution. Now, yesterday we were teaching some students the FX8, and they were looking at the benefits of looking at fib retracements and also waiting patiently for price to break. And here we saw at the start of the trading session going into the US session, we saw price actually moving high, the US dollar moving high against Swiss franc. However, that 4-hour candle closing lower, forming the shooting star formation. Now, the shooting star is null and void if you don't have a bearish engulfing candle to confirm that sentiment is genuinely looking negative at a resistance level at the institution. That's what we've got to wait for now. We want to see a bearish engulfing candle on our 4-hour to complement this shooting star here at current institution and the 50% fib retracement level as a resistance line. Because if price continues to move higher, you can see price still wanting to head or to hug the upside. Eventually, the only candle that's going to cancel this exhaustion candle out is a bullish engulfing candle close above 50% fib. So we've got to see a complementary candle that complements the shooting star, which would be a bearish engulfing candle. So here again, not trading the US dollar Swiss franc until I get my confirmation candle. Otherwise, there's always going to be the risk that price is still going to attempt the highs. Notice the candles are still positive. Yes, we have red arrows, but the candles are still positive, and the RMO is still above the zero. MACD is the only thing that's below at the moment now, but that's genuinely going to happen because of the fact that we are trading into a consolidative range. Price is not making higher highs, therefore not seeing any true sentiment moving with the MACD. So waiting patiently for the one thing that's going to be the telltale sign of negativity at this level here is a bearish engulfing candle. If we don't get a bearish engulfing candle, the next thing that's going to only cancel out this negativity at the top here, or this resistance level, is a bullish engulfing candle. So if you wait patiently, the market will give you that. It'll give you that indication, and then you can trade quite soundly with a lot more probability in your favor. So wait patiently for that candle to present itself, and once we do have it, then we know exactly where our targets are, and we know how much risk is on the table, and we can trade a lot more profitably. So be patient on the US dollar Swiss franc. Last pair today is the US dollar Japanese yen. What have we seen? The US dollar faltering recently on news announcements that Fed's tapering, quantitative easing 3, the QE3 plan, and sure enough, we've seen the US dollar falling lower, but falling into monthly fib retracements here in the shape of the 61.8, or I think that was the 50% here, the blue line, breaking through, moving into the weekly fib retracement here at the 23.6, bouncing, bearish engulfing candle breaking lower, the pullback, and then the continuation into our monthly fib retracement here in the shape of the 38.2, and then consolidating at this level, not even getting towards the weekly fib here at the 38.2 below, consolidating here and then pushing back up towards our weekly 23.6 fib retracement, getting above it, the pullback. Now continue back up to reattempt our monthly fib 50% retracements here, which also consolidates with the 61.8 on our daily, which is our current high that we've seen here in May of this year to our current low that we've seen just recently in June. And now you can see that the 61.8 fib retracement is also in play. Hence the reason why intraday, if I go to my 4-hour, you can see we're trading above the institution. However, price has been very consolidative over the past 20 hours or so as we've headed into the 61 as well as our 50% monthly, because they know this is a monthly fib retracement, a very strong resistance level above price. Price has still continued to make swing highs, which is important if price is to be trading upside. You can see the indicator box over here very much looking upside favored. Okay, I think we're going to see a return to positive trends for any yen crosses This includes the US dollar against the yen, and you can see that the 4-hour candle that's in play right now is attempting that level. So what I'd like to see, and what I told our students yesterday when I was teaching them, is to wait for a confirmed break above this level, because if it's trading above a monthly Fibonacci retracement and it's very strong breakout, then ultimately we're going to look high for the foreseeable future, and this was looking high for the next couple of weeks, next month or so. So very, very important. Trading above the institution, get above that 50% retracement on our daily right now, the 4-hour right now where price is trading. Get above that this week after non-farm payroll, etc., and then look to target further highs. I know straight away if I get above this monthly Fibonacci retracement here, I can look towards my daily Fibonacci retracement, which is 161 pips away, back up here to the 78.6, and above that back to a return to the all-time highs we see on this particular price, which is another 219 pips from that level. So from the breakout on the monthly all the way up to this level here at 100%, we're looking at 369 pips in total. So more than enough profit above this area, but she has to get above it. Okay, the last we want to see is a lot of reattempts of this monthly high here going into non-farm payroll. The figures come out really bad for the US dollar. And then we always get this massive exhaustion candle at a major support and resistance level high in the shape of the monthly fib, and price reverts back to the downside. Last thing you want to do, want to see a genuine breakout over the next couple of days, a genuine pullback and consolidation, and then going into Friday evening close, we want to see a nice bullish engulfing close for that day for Friday to confirm that price is happy above, which was now a major resistance, would be a new support. And then Monday, Tuesday, Wednesday, Thursday, Friday next week, we can trade comfortably knowing that the US dollar is still looking long, fresh long against the yen for the foreseeable future, and we could test these current highs as our target levels to that level. Okay, simple. Not much out there at the moment. We're seeing a lot of consolidation because price is trading into major support and resistance level fib lines, monthlies and weeklies in particular. Got to see a break of it. Will the non-farm payroll figures later this week really help price? More than likely. That's why we're going to be very, very patient. If you are trading counter trend, be aggressive with your entries, stops, and your profits, taking profits. Okay, rather be very, very vigilant with price at the moment. Now we are going into the first Friday of the new month, therefore we're going to see a lot of news Wednesday, Thursday, and Friday. Thursday and Friday in particular starts on Wednesday. Got to have taken on board. Okay, look to see if there's any fundamental news today that could actually factor price movement. If nothing, look to where price is trading right now. Look for breakouts of support and resistance levels, and then trade accordingly. Back it up with some money management as per usual. Keep it simple, and I will see you again first thing tomorrow morning. Until then, guys, trade serenely.